The difference with trading, and this is where people's mental idea of what this is all about gets messed up. The difference with trading is that the pattern shows up in the market.
First.
The pattern shows up first, okay? Then what we have to do is put up our money, meaning how much am I willing to risk to find out if it's going to work? But most traders, because they evaluate, because they judge, and because they analyze, they think that and build a case for the pattern being right, they actually talk themselves out of believing that the risk even exists. They might give lip service to the idea of putting a stop in the market, like some of those errors that I said in the beginning. Right. How many people put stops in the market and take them out, and then and then let what would have been a small losing trade go into a big losing trade? That's lip service. You see, well, okay, I've been told over and over again I got to put stops in the market, so I'm going to do it. But they haven't really accepted the risk.
Right. We see that every day.
Yeah,
every day.
Yeah, they haven't really truly accepted the risk because they don't want to be wrong. And what they have to understand is that this is not a right or wrong game. This has nothing to do. Trading a technical methodology or a technical pattern does not have anything to do with being right or wrong. It's just an odds game. That's all it is. In other words, you get an edge that says I've got the odds in my favor over a series of trades, but you've got to be able to take every single trade because you don't know the sequence to wins and losses. You got to be able to identify what your risk is, and that's simply how much am I willing to spend to find out if other traders are going to come into this market and bid it higher than my price or offer it lower than my price if I sold. That's all it means. And then, of course, you have to have a money management plan for how to